Hey, today we are going to talk about your credit score and down payment. The reason I am doing this video together because your credit score and down payment kind of like goes hand in hand. I can talk about the credit score, but I will have to make another video about the down payment. So instead of me making two different video, I decided to make one video. I'm going to lay it short, sweet, and the reason I am going to make it short and sweet is based on the client that I've dealt with, based on experience with several lenders I have dealt with. And I think this information will be helpful for my buyers or second time buyers, first time buyers. My name is Was Dunn. I am a realtor in the state of Texas. Thank you for tuning to my YouTube channel. Subscribe for more educational video like this. So let's talk about the down payment. We all heard about FHA, and FHA is the easiest loan because it required less down payment. Yes, that's true. However, let's say you have a 500 credit score. You can get an FHA loan with a 500 credit score, but it comes with a kick. Here's the kick. You need at least 10%. Yes, you need at least 10% down payment. If your credit score is 500, you need at least 10% down payment of the home price without the closing costs in order for you to get a loan. And most of the time when the credit score is 500, the loan goes to underwriting. The conditions that the underwriting will send, it's like it's so much and so hard. Sometimes the lender has a hard time closing those loans. That's the loan we call hard loan. And we have the 580 credit score, which is the standard for federal housing. But with the 580 credit score, when you go to a lender, the lender is gonna start say, oh, yeah, we can do the loan, and then they'll try to do it at the 3.5% down payment, and then the loan goes to underwriting, and underwriter start questioning certain things on the credit report, and it's make the loan stretch so much and everybody gets frustrated. Sometimes those loans end up not closing, or they'll come back and ask you, you have something in collection, it need to be paid off, and then they get like a rescore, and they do a rescore, so they increase the score by at least 620. And then you have your typical lender that say, okay, we are not doing 500, we are not doing 580, we straight want you to be at a minimum 620 credit score. When you have like a 620, that's when you say, okay, you are a responsible person enough to get a mortgage, and it's easier to close on the loan. You can get the market value for interest rate. So let's say your credit is 620, and then the current market rate is a 4%. With a 620 credit score, you are not going to get the lowest market rate like a 2.9 or 2.7. You are going to get a higher interest rate because your credit score is so low. So your credit score does play a part on your interest rate, and then your credit score also play a part on how much the lender is required for down payment. My dog start barking right when I start making this video. So it's the 4th of July, so we have kids out there playing, and my dog is like not having it. So anyway, let's move forward. So yeah, so I am not going to talk about VA, and I am not going to talk about USDA. I'm just going to talk about your typical FHA and conventional loan. So for a FHA loan, when you are doing an FHA loan, you are required to to have a minimum 3.5% down payment, yes. And then when you calculate your closing costs, it's always good to have your closing costs calculated at a, I will say, at a 4%. The reason I say at a 4% because your lending fee, like the money the lender charge you to give you the loan, it's vary based on lending institution. So each lender have like different fees. So some lender might give you a one point discount and bring the fee down, and then some lender might say not. So that's the reason why I said have your closing cost at a 4%, and then you have your down payment at 3.5%. So when you calculate the price of the home, 3.5% for down payment, and then you calculate your closing costs. Your closing costs, what is included? It includes your prepaid tax, your insurance, lending fee, half of the escrow, the recording fee, the lawyer that reviewed the document, there is a fee. All of that include on your in your closing costs. And you don't pay taxes on the property until the day of closing, until moving forward. Right now we are in 2021, which is a seller's market where the supplies on demand is less than the consumer. So that's the reason why we call it a seller's market. So sellers are no longer paid for closing costs. So we see offers going on over asking price. So every time, let's say you pre-approve for 250, you need to be looking at home at 200,000, so, or 220. This way you have leverage if you send over asking price, but you still have your money for down payment, your cash on hand, and then you also have your money for closing costs, where when your offers get accepted, you do not have a problem with your cash to close. So I talk about the FHA, which is 3.5% down payment. Now I'm going to talk about conventional loan. Required 5, 10, 15, 20. However, some lender might be able to give you a 3% down payment for a conventional. Some might say it's 5. Some might say, okay, 10, 15, and 20. All of that is based on your credit. So if your credit is challenged and you want to do a conventional loan, the lender is going to look at the credit and say, based on your credit and the conventional requirement, we can do the loan for 3%, 5%, 10%, 15%. So, and how do you calculate your down payment? You calculate the down payment of your loan based on the purchase price. So your purchase price time X amount. So that's your down payment. And then you calculate the closing cost. Your purchase price time X amount. That's your closing cost. My calculation usually it's a little bit higher, a couple of thousand higher, because remember you pay a 1% for your earnest money, and then you pay some option fees. So at the end of the day, the lender come in and subtract, so the numbers will balance. So I am not calculating your mortgage for you. This is just for educational purposes only. So when you calculate, or you have your realtor help you, and you say, hey, can you give me an estimate? So if you do your pre-approval later, you get qualifying really good, which I have a video that I've made about pre-qualification, what it means, and qualifications, what it means. If you watch this video, you will see when you actually qualify for a loan and you have all your document in place, the lender is able to give you an estimate. And most likely, if you send the property that you are sending the offer to the lender is able to looking at the tax for the previous year, and able to looking at if there is a homeowner associations. The lender is able to looking at all that information and give you a more accurate numbers, and most likely what the number is going to be, it might be, I would say, at the 80% accurate, because of course we cannot determine on the insurance how much your insurance is going to cost. So the lender might say, okay, we'll calculate the insurance at this time, the insurance at this amount, and that will give you a final number. So again, if you are thinking about getting a home, you are deciding on FHA conventional based on what you hear. It's always good to have a credit check to see where you are. The higher your credit score, the easier it will be for you to close on the loan, and then the less money you will need to put down payment. And it's always good to have a conventional loan. But if you cannot afford for a conventional loan, it's all I tell my client, get a house. If you have the credit, you have been at your job for a while, get you a home, because a good parents leave inheritance for their children. So you may not be able to get that $500,000 house you dream of, but you can afford it $200,000, you can afford it $300,000. Why not get it? And then if the good Lord bless you later on, then you can get a more expensive house. So this is what I got about FHA and conventional loan right now. Like I said, I was going to be short and sweet. So if you want more detail on how the process works, subscribe and send me an email, and then I can give you like a map to on what you need to do. If you need to fix your credit, what you need to do to get your credit score up. If you need to work with the credit repairs, I can send you some names and informations. I have my business card below. If you click on the link that is have my business card, and you can actually do the link that say you thinking about buying a home, and then you put in the comment what you need, and then I'll send you the information. Again, my name is Rose Dunn. Thank you for watching, and subscribe to my channel. Until next time, goodbye. Bye bye.